the other question is, how does somebody know what kind of down payment they need? And again, I understand it goes along with whatever
Different
vehicle,
types of programs may be going on.
the vehicle that
Yeah.
they choose, that, or the
Mhm.
maybe they don't choose it, but it's the only one they qualify for.
Mhm.
So on average, what does somebody need as a down payment?
In a perfect world, that what lenders love, banks love, everybody is 20% down. That helps get you the best bang for your buck, because if you do not have the full 20%, typically you have what's called a mortgage insurance. So it's an insurance product that you pay every month as a protection for the lender for not having the full down payment. So 20% is obviously the ideal, or more, to save you money, but there are programs out there. One is an example of the USDA loan, which is a rural housing with certain markets with a lot of income restrictions and things like that, that offer 0% finance or 0% down, as well as the VA program. You can qualify for 0 down. But then the FHA that you spoke about as well is as little as 3.5% down. So I mean, the programs are out there. That's why I always just encourage people to reach out to your mortgage lender. Have the conversation of your situation. Tell them about it. Don't just go in and say, I heard about a program that only needs 3.5% down. If you happen to have enough money for 10% down, you're better off doing the 10% down than going into a program that you just heard about on the radio or a marketing flyer, things like that. So you need to have that detailed conversation with your lender. And if you have a good lender, they'll be open to help steer you towards the best program that fits your needs.
Nice.
So when you said 20% down, right?
Mm-hmm.
Does that include if they already own the land? So if a buyer comes in like they do for us, for example, on the development that we own, right?
Mm-hmm.
They'll come in and they'll purchase the land up front, and then some of the banks that we've worked with in the past, that when I say that, the buyer brought their own bank person with them, and then we were told that they were given a percentage of the lot was a percentage of the down payment that they actually had to put up.
Correct.
So like collateral type of thing.
Correct. Well, as far as what we would offer at my institution at Gateway would be 20% of the whole value of the home you're building and the lot value.
Okay.
So you would get credit for that lot.
You
Okay.
you do. Okay.
Mhm.
Great.
Perfect.
Okay.
Perfect.
And when do I know, or when can I lock in my rate? Shouldn't my rate be locked in the minute I call you on the phone?
That is a question that everybody must bring up with their lender, because there's too many times it's a misconception, just because you had the conversation with your lender that you're locked, and that's not always the case. So typically, to lock a rate, you must have a house under contract, because we have to have a property to lock the rate for a loan for. So that's what you need to, when you do the actual application, you need to have the conversation with your lender. Am I locked or am I floating is the term that's used when it's not locked. So what that means is you're still rolling the dice on the market. At any point during the process, you can make the call typically and lock the rate, but some people, if it's if the contract's a little vague for when the closing might be, it might be a little too early to lock, because you don't know if it's a contingent offer of selling your home or things like that. But most lenders will lock you up front, and that's what you need to ask. And what that means is your rate cannot change regardless of the market, as long as you close in the amount of period of your lock rate time. Also a great question to ask when you see all these promotions out there for get this low rate or this low rate. Call that lender that's advertising this 3% rate on this flyer and ask, if I lock today, will that be my rate? Because a lot of the misleading advertisements will be, it's this rate, but that lock period is only like 15 days or something unrealistic for you to actually use. So when you call to Rate Shop, ask the lender, if I applied today and locked my rate, what would that be? And sadly, 9 out of 10 times it'll be something different than they might have just told you. So that's a good way to find out the honesty behind who you're working with.
So, so along with the lock rate kind of goes the points, which I know is not a 4-letter word, but it should be. And I understand how that all works for you guys. Points, I get it.
Maybe our listeners don't, so maybe Max
Well,
will share.
it's a place where the the institution, we'll say, can make a little bit extra cash.
Right.
That's what it really comes
No,
down
I
to.
Right,
understand.
it gives you the
You know,
ability to pay money to the lender to get a better interest rate.
Right, and so is that always worth it?
It depends on your long-term goal.
Okay.
Um,
So what if I took a 15-year? Because we recommend
Right.
people taking 15 years
Oh,
versus 30
by all means,
all day long.
if you can afford and doing that 15-year mortgage doesn't stretch you to an uncomfortable level of your budget, 15-year by all means is always the best way to go. You will save tens of thousands of dollars doing the 15-year. When
Okay.
it comes to points, you have to have a long-term goal of being in that house. Most of the calculations of clients that I've ran for them will run the scenario because some for buying a rate down with points versus going with whatever the kind of the free rate would be. And based on my most recent ones, it came out to be about 7 or 8 years was the time period
Yes.
that it would take to recoup that upfront cost for the lower rate versus the amount of difference in your monthly mortgage payment. So, you know, you might have to pay $1,200 to get the rate. It lowers your monthly payment by $30 a month. So we're talking that time frame before. So buying a rate, if you have any inkling that you might not be in that house or something's going to happen in the next 4 or 5 years, most of my calculations, it's not in the customer's best interest because they
Right.
won't recoup what they paid.
Right.
If your goal is that's going to be my forever house, we're going to be there probably for 20, 30 years,
So Warren Buffett.
it would be sometimes using points is the best option for
Right,
that.
right. So it sounds like, and I bring up Warren Buffett because he's bought the same house. He's never left. you
Yeah.
know. So that would have worked great for Warren. Just in case he didn't know, I thought I'd let him know that. It's probably more than paid for now. So I think I remember reading he paid less than $20,000 for that house that he's in. But
Wow.
what your statement though just sounds to me like if you're younger and you're just buying your first house or maybe your second house, again, there's some variables in there, but then shooting for that 30-year might be a better idea than the 15-year. But if you're on the opposite end, where you know that this is probably my last home that I'll be in, right? Or maybe you're in retirement, and see that's catchy because a lot of people that are in retirement maybe didn't quite do all the right things, so they need to have that 30 years to get their payment
Right.
down. But if they can afford to do it, they're better off maybe being at a 15-year, especially if they're maybe 5 or 10 years away from retirement. My thought would be the 15-year would be a better way to go, so that way they're only 5 or 10 years into the retirement, the house is paid for.
It all depends on what their
there's a lot of
their end
variables.
goal is.
Right,
If they're
yeah.
wanting to leave it to family, or folks that aren't leaving it to family, they'll go with the 30 because they said there's no need to pay it off.
Correct.
So it all depends on the situation.
Right.
But by all means, 15 years, if you can afford it, do
That's
it.
the way
Right,
to go.
right. Even I bring up Dave Ramsey. Pretty much everybody knows Dave Ramsey, Tacos,
True
Radio
believer.
Tacos. Yep, true believer. Believes in not having any debt at all. And I was listening to him yesterday, and even he said, if you got to have any debt, I'll forgive you if you buy a house. You know, and so, you know, if you got to have some debt, that's probably the best debt you could have. You
Right.
know, and just so people know, and I know you know this, Julie. I was just looking at Julie, and she's like, okay. What was I just gonna say? Shoot. Oh man, I lost that thought process. All right.
That's not uncommon for Sid.
So let's just backtrack real quick.
His mind thinks way too
Way
quickly.
too fast. So let's just back up for a little bit. And so the first thing that folks should be doing is, before they even maybe call the mortgage person, is find out where they are with their good debt or bad debt situation.
Right.
You know, get a hold of your FICO people. Or not FICO, what is it? They get a hold of
You can use Credit Sesame, it's
Yep.
free, or
Credit
Credit
Karma.
Karma.
Credit
Yes.
Karma.
Yeah.
Somebody like that, get your free report, right? And they should probably maybe have that before they come and see somebody like you.
I recommend that you look into your credit before you even start the search, because your credit score has two major factors. One of if you have the ability to qualify for the mortgage, and the other, what your interest rate will be. Interest rate's driven by credit score.
Right.
And something as simple as paying down a balance on a credit card to about 40% of your maximum availability versus where it might be now. I've seen it jump scores 20 points. I mean, it can really have a strong impact just getting those things
Yes.
in order beforehand, because you want to be set up as successful as possible before you go in to speak to the lender, because you want to give yourself, one, the best opportunity to get the mortgage, and two, you want to get the best interest rate possible.
Correct.
And there could be items on the credit report that you're unaware of.
Right.
So if you could get those cleared up, you know, it could be as easy as a, you know, $200 doctor bill that you
Mhm.
didn't know about for whatever reason, that you could get that paid off. And a lot of times, I mean, that takes it out of collections and off your report, and that will
Right.
reduce
I
your
strongly
score.
encourage everybody reviewing your credit report a couple
Mhm.
times a year, even if
Yes.
possible.
Yeah, and would you say that if they do have some issues, bring those to you, or try to tackle them prior to coming to a mortgage person? I know that's really not mortgage people's jobs. But in a way, it
I
is.
always, for my clients, I try to go above and beyond, because I know what it's like when someone comes in and I have to be that person that bursts their bubble, that they get declined for the loan. It's the worst part of my job, is seeing a couple come in excited to buy this house, but because of something silly that happened 2 years ago on their credit or something like that, causes us to not be able to move
Right.
forward with the mortgage. So that's where I try to set myself personally apart from a lot of the other lenders, because I will take that time to sit down with my clients and explain to them what can be done, items that can be tweaked, and then we also have the availability to run like a rescore. I give them homework of a couple factors that they can do to improve their score, and then they can come back in and we can do a rescore to see if it's jumped up to the qualifying
Okay,
level.
so once they get their debt, they talk to you, a mortgage person, and then after that, they get, let's say they got everything squared away somewhat, then I think their next step would be either pre-qualification letter or...
Right. That's what typically right after we run the credit, if all is good and they're ready to move forward, we'd move forward with a pre-approval, pre-qualification.
There's two types of those, right? One is just a letter saying, yeah, you're pre-qualified, and then the other one is...
Some institutions do it with actually underwriting the actual file, sending it to underwriters, but that's not too common. For myself, what we do is we collect all the most valuable, detailed information from them. And what lenders do for loans is it's an automated underwriting system. So it's an actual program where a computer is the underwriter, and we submit the file to that computer system, and it spits out based on the information provided if it's good or not. So I always recommend doing that, because some people will do their house shopping thinking, well, I make great money, I have low debt, but sometimes there's a factor that's just not thought about.
Right. Yep.
Very easily overlooked, and that's what you don't want to do. You don't want to give earnest money to a realtor, show property, and then find out you can't get the mortgage for some reason.
Understood. Right.
Yes.
And so then after those 3 steps and a few other ones in there, little bullet point type stuff, then they should go shop for their house.
Correct. That's when they need to call their licensed realtor.
Right. Yep. Okay. All right. That sounds good. And just to recap real quick, Max is from Gateway Mortgage Company, and they are located at 4493 Oleander Drive, Suite C. And the office number is 843-379-9522.
Repeat that.
843-379-9522. And a direct number for Max, if you'd like to give him a call, is 304. That's still West Virginia.
Yes, it is.
Okay.
Not near
You know where his
forever.
heart is. 304-288-1122.
Repeat that.
304-288-1122.
And we actually, just to jump in, we just moved last week
Oh, we got a new
down the
address?
street to 48th Avenue, to just down the block at the corner of 48th and Grissom.
Okay,
Oh.
so more importantly,
1107
skip
48th
the
Avenue.
address.
Just give me a shout.
Just give Max a shout on one of those 2 phone numbers, and he'll be able to help you out. And where we're going now?
Okay, well, we're going to take a quick break, and when we come back, we're going to talk about finding sources of money.
Yep, still identifying loans, but finding sources of money.
Yeah, you can call in at 843-839-9950. Thanks, Max!
So both videos have gone down.
The what?
Both videos went down.
Yeah, I saw that.
So I had to restart it. So we might need him.
Hello, everybody. Is everyone still there?
We've got
Who's on?
One of my friends from West Virginia, Jeff Longwell,
Sound good. I call him
morning,
Matt as
Jeff.
well, so I apologize.
and then Cassidy Beatty.
Okay, not a problem.
Good morning, Cassidy.
You were right up on the mic. Everything sounded good. The quality was really good. So good stuff on that. Are you going to be back on?
Yeah, if you want to stay.
Yeah, I'll say.
Yeah.
Okay, cool. So I'll leave your mic up, so you'll be all good to go. So, all right, we're good. I got about a minute plus here.
Okay.
Thank you. Do you see what time it is?
9:08 already.
Like, that's what happens when you get involved, so we're probably not gonna be able to do.
We'll see.
Okay.
These we don't talk about too much. We kind of just run through them.
Yeah.
Yep, and then we got this page.
Let's see. You wanna do the trivia?
Yeah, we'll do the trivia right when we come back.
Trivia? Let's do the trivia.
Trivia. We might even skip this. If we're gonna do anything, let's skip this.
Okay, one,
Let's just
two,
cross it, and then.
you want me to try one more?
So
One,
we
two,
won't do the
three.
first ad, we won't do the ad.
Yep.
Today,
No, probably not.
843-839-1006 or online at ChaseSignatureHomes.com. Chase Real Estate USA. If you're visiting the Grand Strand and looking to relocate to the Myrtle Beach area, or maybe you're lucky enough to already live here and you're looking to build or buy, there's only one name you need to know.
Hey Kathy, if you're on,
Chase
hang
Real
in there.
Estate USA will find that perfect home for you and your family to live and grow together. That perfect home for you and your spouse to retire in and grow old together. That perfect second home so you can visit the Grand Strand whenever you want. Or the perfect land for you to build your dream home. And yeah, Chase Signature Homes can build that dream home for you. For more information about Chase Real Estate USA, call today, 843-839-1114. That's 843-839-1114. Feel free to call in and talk with Sid and Julie at 843-839-9950. It's the NoBull Money Hour with Sid and Julie Chase.
Welcome back, everybody.
Yes, welcome back. So we hogtied Max, so he is staying with
Sticking
us.
around.
We're not letting him go. So if anybody has any questions for him, he's still here.
Yes.
And we'll do a quick plug for ourselves on the investment side of our company real
Okay.
quick. If anybody's out there and they're interested in investing, whether it's real estate, alternative, any type of alternative investments, they can give us a call at our phone number, which is 315-398-3322.
Yes.
Reach out to us through email, Facebook, however you want to contact us, and we
The
can
Sid Chase Investment
group on Facebook. Yep. You can reach out to us, talk to us about investing in real estate. We also are getting ready to launch a couple of real estate classes here locally, how to get involved in real estate, what kind of team do you need around you, and if you don't have the time to do it, you can always come on board with us and invest with the professionals. And yep, we call ourselves professionals, and that's what the government says that we are. So you can call us and you can partner with us on deals, and it doesn't take a lot of money to get involved. We've flipped over 400 plus homes. We've done all types of commercial deals and development deals and senior assisted living deals, and we have a whole lot of different opportunities to get involved with out there.
Yes,
So if anybody's
absolutely.
interested, you can give us a quick call and contact us, and we can go over it with you.
All right, well, let's see. Where can we borrow money? Obviously, other than the bank. Well,
Basically, there's the title, I believe, Max, would be institutional lenders, and under that main title would be your banks, your credit unions, savings and loans, and I don't even know if there's any actual savings and loans still out there in the world. I think they all got kind of wiped out.
I can't think of any.
I can't think of any off the top of my head, but I threw it in there just in case there was one survivor. Mortgage brokers, which is you, and then your mortgage bankers. For government agencies, there is only 2 or 3, and correct me if I'm wrong, but Veterans Administration, and then you have the Federal Housing Administration, and I think USDA would be the third
USDA
one.
is still out there, yes.
Still be the third one. Yep. Now, if I'm correct me if I'm wrong. He's smiling when I said that. The Veterans Administration and the Federal Housing, and I believe USDA act as an insurance policy, then they actually don't give you the money.
Correct. Yes.
Right, right. So they're not, you're not going to the VA and they're gonna give you $200,000.
They just kind of back.
They're gonna
They back the loan,
they're
right.
backing that. And then if I also remember, and I don't, probably a lot of people don't know this, so it's, you all know I like to do trivia stuff. So, if you get an FHA loan, you qualify, right, and you're in your house, and then 4 or 5 years down the road, or 10 years down the road, you happen to falter on that, right, for whatever reason, doesn't matter. The FHA still pays the bank for whatever the remaining amount of the loan is.
As far as my knowledge,
That
yes.
is, I read that yesterday. Yeah.
But in speaking of the government programs, the VA program is a phenomenal program that our government does offer veterans. A lot of veterans aren't totally aware of that program, and it is a phenomenal program for our veterans that served our country. What it is it allows 100% financing, and they do not have to pay the mortgage insurance like all the other loans that have to pay for not having the 20% down. So
Right.
it's one nice thing that we do help for our servicemen and women.
So you're talking about the PMI?
Mm-hmm. Correct.
What
They
is
don't
that?
have to pay the PMI, the private mortgage insurance on the VA loans.
Okay, good, because that thing can be a real pain.
Right. It's just unnecessary, but for the veterans, they take care of that
Right.
for them.
Yep. Yeah, I've
That's
used
awesome.
mine twice now, actually, so it worked out really and good for me.
And Devin's looking to.
And our son Devin is also doing that. Yep, right now. The other thing too, though, on the PMI, people should pay attention to that, because at some point in their paying down their loan, that should be
Correct.
Ex,
It's supposed to automatically fall off when you've reached 22% equity in your house.
22%. Okay.
yeah, well, automatically. I'm supposed to get home at 6 o'clock at night,
That is what the lender's supposed to do.
and 501 doesn't allow automatically. Right. And then the other automatically thing is, when I get home, there should be dinner on the table.
Correct.
And that automatically doesn't happen either. Normally it's,
It does
Hey,
when
I didn't
the
have
shoe
time-
was on the other foot.
I didn't
huh?
have time to cook dinner, Sid. Why don't you do it for us? So, and the other group of people are, you have that too at home? Do you cook, or does she?
No, my wife is a phenomenal cook.
Is she?
Yes.
Does she need a part-time job at night at 6 o'clock?
You're welcome to come to our place.
I am?
Yeah.
You want to call and double check that? You better text her really quick. Honey,
Are you all right with that, sweetie?
we're coming for dinner tonight. And the other group is private lenders.
Mhm.
And which normally private lenders don't do full mortgages for people, but there is a few out there. There's like some crowdfunding platforms and things like that that are available. One of the things about private lenders, if you ever go to them, and I happen to be that kind of guy. I through our fund that we have, and well, we call it our fund. It's our investment money type of stuff. But we seem to overanalyze the deal way more than even you guys do, because we're taking, we don't have that FHA or VA or anybody like that to back us if it falters. I have to go through the foreclosure process and hope to God that they didn't wreck the house during the time they were there. So those types of things. So we kind of overanalyze the deals a little bit, and but the good thing about that is for those listeners is that if I okay a deal, then you got one heck of a deal.
Yeah,
because
because
I'm
Sid has missed many deals because he's overanalyzed for too long.
yeah, well, it's okay. It's just the way it happens. And our contract basically comes down to almost just 1 or 2 sheets of paper. It's a promissory note is really what it comes down to, and normally we hook some type of collateral to that. So if you don't pay, I take your Ferrari or your Lamborghini or I don't know, something. So it's a little bit cleaner. The process is a little bit more intense for private lenders or individual lenders or groups of lenders. There's actually groups of people out there that do nothing but do promissory notes or buy notes and things like that. They're not easy to find, but if you search, you can find them. So did you think of anything else you want to say real quick before we move on to the next segment? Thanks. No? Oh,
Got it all covered.
his wife
Nice
said,
job.
really? All right, so I want to just throw in here, and again, folks, if you want to call in and ask any questions, feel free to, or on Facebook, be happy to answer those also. But I want to do a few trivia things.
Yeah.
I bet you some of you guys didn't know, you know.
Did you know?
There are more people in New York City, in just the little city of New York,
Tiny city.
that there than live in 40 of
Of
the
our
50 states. That's scary.
That's a lot of
So
people.
just let me say that again. Did you know there are more people that live in New York City than live in 40 of the 50 states? And now that, I'm not just figuring that, I didn't pull it out of my head, you know. I had to watch what I said.
Fact
But
check.
it's a fact thing. It comes from the New York City Department of Planning.
Yes.
I mean, that's wow. We're not going to New York City anytime soon. We're definitely not moving there.
No, we've been many times
We have. We did the Thanksgiving Day parade.
with the boys
with
when
the
they were
boys.
younger. Yeah.
Yep. And we went and watched the ball drop.
Yeah. We did that.
Stood in the rain for hours.
Oh. But we were like right up
We
there.
were right on top of the ball.